All right, let's dive into Deckers Outdoor, ticker symbol DEC. We're looking at a stock chart that has everyone talking and really asking one big question. Is this stock about to fall off a cliff, or is it like a coiled spring just waiting to bounce back? We're going to unpack the technical report and see what the clues are telling us. So picture this. It's October 24th, 2025. And if you're holding Deckers stock, this is the number that hits you right in the face. A drop of more than 15%. In a single day. I mean, wow, that is a brutal, brutal day for investors.
So the big question is, why? What on earth could cause a drop that steep, that fast? We're going to treat this like a detective story. The analyst report is our case file, and we're going to sift through the evidence piece by piece to figure out what really happened here.
Okay, first up, let's look at DEC's dramatic 15% drop. Our investigation starts right at the scene of the crime, so to speak. The stock was cruising near a peak of about $115, and then boom, the floor just fell out, closing the day all the way down at $86.94. And just look at the wild ride on that one day. The stock hit a high of over $102 and a low of just under $87. It didn't just slowly trickle down either. This was what traders call a gap down. It opened way lower than where it closed the day before and just kept on falling. That huge range, that tells you this wasn't just a bad day. Something major was happening. So where do we look for our first clues? Well, in any analysis like this, you always start with the fundamentals of technicals, price, and volume. They tell you not just what happened, but how much force was behind it. Okay, check out this table. I want you to focus on that last column on the right, volume. See how it's just kind of normal for the first several days. 2-3 million shares trading hands. Now, look at that very last line, October 24th. That's not a little jump. That is an absolute explosion of activity. Let's just put that into perspective for a second. The average day sees about 3 million shares change hands. On this day, almost 21.5 million. That is 7 times the normal volume. This isn't just a few people selling, this is a full-on stampede for the exits. You know, there's a specific term for this in the trading world, capitulation. It's that moment of pure surrender. It's when investors just throw in the towel, they give up, and they sell everything, no matter the price. And here's the interesting part. For sharp traders, this kind of mass panic, well, it can actually be a huge clue that we might be getting close to the bottom. All right, so we've seen the raw price and volume data. Now let's pull out the forensic tools that analysts use. We're talking about technical indicators. These things help us measure the market's pulse, the momentum, and the feeling behind the price moves. First up, we've got moving averages. You can think of these as a baseline for the stock's recent price. And right now, Deckers is trading way, way below its key baselines. It closed around $87, but its 5-day average was up at 98, and the 50-day was all the way up at 108. I mean, that's a huge gap, and it's a screaming sign that the sellers, the bears, are completely in charge right now. Okay, next tool in the kit, the RSI, which stands for Relative Strength Index. All you really need to know is that it's like a speedometer for the stock price. It tells us if the moves are getting too extreme. And for the RSI, the magic number is 30. When it drops below 30, it's a big flashing light that says oversold, meaning the selling might have gone too far. And here's where our detective story gets a twist. DEC's RSI is sitting at 30.23. It is right on the doorstep of being officially oversold. The rubber band analogy here is perfect. The selling has stretched this thing so far, so tight, that it might just be ready to snap back. This is our first major clue that the downward move might be running out of steam. But hold on, because the plot thickens. Our next indicator is the MACD. And it's all about momentum. And, well, it's telling a completely different story, a much more bearish one. So this is what it all comes down to, a massive contradiction. It's a classic tug of war. In the bearish corner, you have a negative MACD, and the price is way below its moving averages. That's pure downward momentum. But in the other corner, you have rebound signals. The RSI is screaming oversold, and another indicator, the Williams %R, is literally at negative 100, its most oversold reading possible. You've got momentum versus exhaustion, and this conflict is exactly what traders are looking at right now. So what gives? Bull, bear, or just sideways? With these conflicting clues, downward force meeting upward pressure, where does the stock go from here? Well, the report actually breaks it down into 3 possible scenarios.
Let's walk through them. First, the bullish scenario. We get that oversold rebound. If the price can break back above its recent high of 90.95, we could see a quick rally. The bearish scenario? The selling continues. If we break below that support level of 86.83, look out below. We could see another 5 or 10% drop. And then there's the neutral case. The stock just kind of gets stuck, trading sideways between those two levels while the market catches its breath.
Okay, so after all that, the price collapse, the volume spike, the contradictory signals, what's the analyst's bottom line? What's the verdict? And here it is. The analyst basically says, look, there's no denying it. The stock is in a bearish trend, and that big drop made it worse. But, and this is the crucial part, things are so extremely oversold that there's real potential for a short-term bounce. That rubber band we talked about, it's stretched super tight, and a snapback is definitely on the table. So what does all this mean for you? Well, it depends on who you are. If you're a long-term investor, you might want to just sit back and wait for things to calm down. Let the dust settle. But if you're a more active, short-term trader, this situation might be exactly what you look for. A chance to play a quick rebound, a potential bounce off these extreme lows.
And that's really where this whole analysis leaves us. It's a fascinating crossroads. You have this powerful downward momentum slamming into a wall of pure seller exhaustion. The clues are all there, but the outcome isn't written yet. So it all boils down to this one question. In this battle between momentum and exhaustion, which force is going to win? We'll have to watch and see. Thanks for digging into this with me.